Like, comment, subscribe, and I'll get more into details in this video when I get home.
All right, guys, let's get right into it. First and foremost, we need to discuss the fact that trading is probabilities, not predictions. And this is one of the reasons why there's such big liquidation events and why so many people lose money in trading. Every trade needs to be approached with defense focus, not offense. And when you approach it with offense, that's when a lot of people go max long leverage because they think this is the bottom or this is a great idea or that ATH is being broken. And then all of a sudden, it's not the right idea. And they went into a position where if they're wrong, they can potentially lose everything. Every trade that you make needs to be set up in the framework that, okay, if I lose on this trade, that's fine. I can easily recover from this and survive to trade another day. But most people don't trade that way, and that's unfortunate. So let's just talk about the core ingredients that led to this particular market crash, okay? There's 4 different things that happened. 1, there was a velocity trap. 2, the market structure flipped bearish. 3, we were in the force pattern stage of a market cycle, which is the last leg of the crypto bull run. Also, there was a 4-year record high open interest level, which is massive. That basically means that people were maxed out on leverage, which can only mean one thing, and that's an implosion is coming soon. Also, there was a monumental 3-year peak overbought monthly chart. So first and foremost, let's talk about velocity versus compression. Now, when you're looking at a resistance level, which is typically identified as a peak level from the past, and if you run into that level in a dramatic, extreme fashion with a lot of velocity, break that resistance level, and then fail that level and then come back down, that is what we call a trap, okay? And this typically is a very strong signal to go short because everyone that just FOMO'd in long at the top with max leverage because they're like, oh shit, we got to get on board before this train leaves the station. But the reality is all those people eventually have their leverage max long up here. And as soon as price starts dipping below that level again, they all get flushed out and all those stops trigger, causing a dramatic decline to the downside. And that is what we call a bull trap. I love trading this setup. It's a great area to be shorting after a trap, after a velocity move. All right, just closing this trade. Boom, 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 cha-ching, cashed in. Brief interruption from today's video. I want to tell you about something that you need to understand. One is that about 90% of traders have accounts under $10,000. And that only means one thing, is that you're trying to turn that small amount of money into a large amount of money fast, trying to flip your account. Probably seen people talking about turning 100 into some crazy amount of dollar amount, which is just simply not realistic. It's not gonna happen for you. The probability is just way too low. Insert Hydra funding. This allows you to get access upwards of $200,000 in capital. Now, typically the standard model for challenges is you have to go through and take a 2-phase or 1-phase challenge. And this is extremely difficult. And yes, we still offer that, but we wanted to change the game. We are now officially the only prop firm out there offering instant funding for crypto. And with that, you can get access up to 100K in capital, which is the equivalent value to my new AP here. So this is an absolute game changer because we have over 100 crypto pairs to trade from, and for a limited time, for only 30 days, we're offering 50% off all instant funding and all challenge accounts on the entire website under 50K. That's crypto accounts, Forex accounts, and futures accounts. So if you're interested in getting started with that, you can click the link below and use the promo code FOUS50 to get 50% off any account on the entire site. We also offer the brand new crypto instant funding account with over 100 crypto pairs. Anyways, get started now, FOUS50. Links will be below, but let's get back to the video. Velocity simply just means that the move came and retested that resistance in an extremely fast manner without any sort of like consolidation. Now, when you're looking at breakouts or something that you should be fearful about shorting, you're going to see what's called compression. And that's typically your standard breakout chart patterns where you see higher lows continuing to form here, and then it gets compressed into the nose of that resistance level. And as soon as that level breaks, that creates a slingshot move to the upside. And those are patterns that you can trade to the upside and actually make money on long. And so if you see that compression building at a resistance level that you're monitoring, that can typically mean, okay, if you're long, I can be a little bit more comfortable in this position or even start accumulating long as we make higher lows to take advantage of that push to the upside. But if you see a massive pump into resistance that's just straight up, no compression, no kind of consolidation, that is a higher probability of it becoming a trap, okay? Now, when it comes to compression, this doesn't mean that that cannot fail. I used to trade this pattern right here, just the standard ascending triangle breakout in the stock market from like 2005 to 2008. It worked every fucking time. If you saw this pattern, you're going to make money. Now, eventually this started to fade, and then I had to learn how to start shorting, because a lot of these patterns, even if it was a compressed breakout, a lot of times if that compressed breakout failed, it would turn it into a massive shorting opportunity. And then everyone who had been accumulating long in here, even the people who max FOMO'd long at the top as soon as it broke out, as soon as their stop started triggering, that just unwound and it turned into a massive reversal. We also saw a compressed breakout turn into the top of the bull market of 2021, which we'll take a look at briefly as well. So the question remains is, if we're looking at a top of a market, is this going to be a breakout to ATH and actually run? Or is it the top and we're actually going to see a trap and a lot of longs get absolutely wiped out? It all boils down to velocity. Was it a velocity move into that peak run? If it is a high velocity move into the peak run, this is a trap that's likely and it becomes a valid short. If it's not a high velocity move and has compression, this is likely going to lead to the potential of a continued breakout to the upside. Now, if we look at Bitcoin here, as well as Ethereum, what happened here on the actual move as we pushed into ATH, right? We saw two basically velocity traps that happen. We saw this one happen right here. Why can I draw? This was a bull trap after a velocity move. Yes, it came back down and consolidated right here, or it came back down, retested 50-day moving average, but then just skyrocketed straight into the previous ATH. And as soon as that level failed, it resulted in a massive, massive decline. Okay, we saw one pump to the upside, another stop push to the downside, and then a massive, massive pump to the upside, broke ATH, which created another bull trap that resulted in a massive, massive dump to the downside. So this was a high probability short, of which I eventually got short on the retest. I did not get short until this broke down to the downside, came back up and retested that zone. And you can see here, this was our alert on October 9th. Short Bitcoin 2% retesting the dump trigger. Next stop, daily demand, major bull trap at ATH here. Okay, and that was what the current chart looked like at the point in time when we started to get short in the market, not just BTC. We were also accumulating in short on Ethereum as well as some other altcoins as well. But that's basically what we were looking for. We had a velocity move into ATH that created a bull trap. So when you see velocity into a trap, that is a high probability short. If you see compression into a breakout, that leads to potential shorts getting triggered and stopped out, and longs just continuing to make money on the way up. So that is kind of what you need to look for when you're looking at the market. But let's just rewind back to 2021 bull market, all the way back here, which was kind of a compressed breakout, right? We first initially saw a high velocity move into ATH, then a consolidation, and then one more breakout to the upside. But as soon as this one secondary failed here, I released a tweet saying that was a bull trap on Bitcoin and a trend reversal on ETH, and that was actually the peak of the bull run. So it doesn't matter if it's compressed or it's velocity. Compressed means it's a higher probability that it could potentially go up, but it doesn't mean it's a fact. That's why you need to approach every trade with defense in case you are wrong. If you were trying to long this breakout, you need to be able to look at it and say, okay, this actually turned into a trap. I need to shift gears here and stop out of this position. Most people don't think that way. Most people don't trade that way, and that's how they lose everything. So this was actually a consolidation, compressed trap, breakout into a breakout, and then trapped everyone, and then just absolutely dumped to the downside. Okay, so those are two things that you need to look for when you're looking at velocity, compression, and traps in general. Now, the next thing that happened that we have to take into consideration that also gave us confluence. Confluence is essentially when you have two rivers meet in the middle and it creates a super river. When you're looking at trading analysis, if you can add multiple things that are telling you the same thing, right, that's building confluence. That's building more power for the potential signal that you're looking for. So if you don't know what market structure is, it's just basically when new highs are taken out, that's called a break of structure. And then a new higher high is continued up, and that just means you're in a bullish trend. But the moment you break structure and create a new higher high, that previous low, if that low is taken out, like you see here, that means it's a change of character, and that means that the trend is now potentially shifting to bearish. And what you would look for after that moment is a bounce back up. Even if it breaks that low, it doesn't mean it's just going to dump continually from there. typically what happens is you see a rebound from that level into a supply level that you can start shorting into, and then you see that previous low get taken out again, and then it becomes a new bearish trend until that trend flips back to the upside, and then you have another chalk down here somewhere, and then it potentially turns back into a bullish. So this is exactly what was happening if you're looking at Bitcoin and Ethereum. Let's just take a look at Ethereum on the chart here, which was also giving us confluence that we should potentially be getting shorting, and it is a potential top signal. So what were we seeing here? Higher high, higher low, higher high, higher low, higher high, okay? And at that point, we had another break of structure to the upside. So market is still bullish at this point. Then we had the swing low here. And so at this point, if we're just looking at this price action right here, right, we're still bullish. Unless this low is taken out, we are still bullish. And if we break out above this level, that's just break of structure, meaning that we're continuing on new highs again. But you can also see a velocity trap that triggered right here. Broke out just super high velocity into that level. All of a sudden that turned into a trap and a huge dump to the downside. Okay, so you also have to factor in a lot of people probably buying that are just unintelligent about what trading behavior is, started buying in here and then just got trapped, dumped to the downside. But as soon as this level broke to the downside here, that means this is now a change of character, which means the market has now shifted into bearish market structure. So what would that mean? If we're looking at this logic here, change of character, we're now going to potentially look for a short into a supply zone. So as price came back into, if you even break down the weekly supply zone here on ETH, which is essentially this entire zone here, price came all the way into weekly supply, that entire zone. And as soon as it went in there, it then had a bearish engulfing and then absolutely dumped. And of course, broke structure again. And now we are still in bearish market structure. This is another break of structure to the downside. Okay. And that's where we cleaned up. We started accumulating short in our scaling plan into that zone, massive liquidation event to the downside. Same thing happened here on Bitcoin, right? We got in here, there was a trap, and then we shorted up here. And at that point, that was when the massive dump happened. So we got in on the trap on Bitcoin. On Ethereum, we got in on the retest of supply of the weekly market structure after we shifted bearish. Okay. The next thing that we have to look at was the number 3, the force pattern stage of the market, which is the last cycle leg of the crypto market. Now, if we look at my framework, I trade a 9-cycle framework for trading crypto. And if you look at what's going on here, we have a revival, survival, then a force pattern. And a force pattern is the last leg after a compressed breakout of ATH, a massive run. Then typically after the 50-day moving average is broken to the downside, I call that Armageddon. And then we go into some other patterns that we can trade to the downside, of which we traded a sucker punch to the downside on Ethereum, but we actually traded the ATH trap up here before the 50-day moving average even broke down on a Bitcoin. What you need to know is that once you're in a force pattern of the crypto market and we're at an ATH breakout, the top can come at any point in time. And when we're in this area of the force pattern, this is when there's so much FOMO. So many people are talking about how high we're going to go and never sell. It's never coming to an end. And I'm not calling the top right now. I have no fucking idea. I'm already out of the short. I'm done. The trade's closed. $237,000 profit. So what happens from here, I don't fucking care. I'm not here to call long-term tops and long-term bottoms, okay? I'm here to trade what is the next opportunity of this 9-cycle framework. That is why we have 9 cycles to trade, because there's so many different steps of the market cycle. And each one of those steps, there's this particular pattern that we can trade, and then we wait for the next pattern to trade. We don't try to call the top and bottom and then wait to see what happens over the next 2 years of that actual pattern. So in this case, we are in the force pattern, and you just need to know that if you see a high velocity bull trap and bearish market structure flip and the 50-day moving average all break down, those are all things of confluence that could potentially turn into a market top and downside potential, which you can take advantage of going short by understanding these frameworks. Next was 4-year record high open interest. Okay, open interest is essentially, look at what's going on here. Open interest is essentially just a calculation of how many people are using leverage and maxed leverage in the $1 billion amounts. And when people are using max leverage, all that's happening is people are just getting way too much FOMO. And as price continually grinds up, think of it like a weight on a bridge. People are getting 10x long, 20x long, 50x long, 100x long. And the higher price goes, the heavier that weight becomes on this bridge that's supporting price, right? The bridge is the dip buying opportunity. Every time we come back down to that bridge, people are getting more and more leveraged on the next high because they're max leveraging long. And eventually, that bridge has so much weight on top of it by way of interest and leverage. Eventually, some whale just takes a little fart on top, of which that's exactly what happened. Just before the actual dump happened, some big whale trader got short like $50 or $100 million short, and then Trump released the news, and then everything came crashing down. The bridge broke, and that's when you saw a change of character in that huge liquidation event. And then also after that, a lot of times people then start buying that dip, going max long again to try to earn all their losses back on one trade, until eventually that all just comes imploding down on itself again. And that's what leads to a bear market and continuation of break of structures to the downside. And that's where a lot of people also lose all their money, is just trying to buy that dip that keeps on dipping because they haven't recognized that the market has shifted into a different part of the market cycle, and you have to trade different patterns. Once the market shifts into a different market cycle, you can't keep trading the long patterns that used to work. You have to shift into a new pattern and framework, of which I call the whiplash, cockblock, and sucker punch, that all happen in bear market territory and bearish market structure. So those are all the things that happen. We had 4-year record high open interest. You can see as we are peaking out and a bull trap and a high velocity move, you can see that open interest just absolutely collapse. And you can also see that it kind of works in a trend. When we are above the moving average on open interest, we're in a bull market. When we are below the moving average of the open interest, we are in a short-term bear market. And right now, we have significantly collapsed open interest, and we are now in a bearish trend below the moving average on open interest, which would lead me to believe that we still have more downside to come on the market. Another thing to note, that almost every time you see a massive liquidation event, that low is retested and broken within the next 30 to 60 days. So if you see a low here like this big liquidation wick, that low is taken out. Low liquidation, that's taken out. Low liquidation, that's taken out until it's finally no longer taken out. Same thing here. Low liquidation, the low is taken out. Low liquidation, the low is taken out. Low liquidation until it finally became the bottom, and then relieved itself and then pushed to the upside. But typically after a big liquidation event, those lows are taken out several more times before the bottom is in, and then we can move back up to the upside into a bullish market structure. And then we have a change of character back to bullish, and price starts going back up to the upside. Also, number 4, we were in a monumental 3-year peak over bought monthly chart. If we look at the monthly chart here on Bitcoin, just look how long we have been overbought. The longest we have ever been overbought in Bitcoin. And you can see that price continually moves higher, but the fear and greed index is moving lower, which is creating a bearish divergence. Eventually, at some point, this massive parabolic move is going to collapse on itself and have some sort of big pullback. We really haven't seen a massive pullback yet, like we have seen every time in the past, okay? Yes, there's institutions that are involved now that could continue supporting price, but there is going to be a point in time where the monthly chart does come back down into fear territory down here and create a massive buying opportunity. And I call that the apex, of which we have seen multiple times in the past, and we have not seen that in recent years. And we have just continually created a bearish divergence, and which leads me to believe that we are getting close to an area of danger before we could potentially see a big pullback to the downside. So those are all the things that led to massive profits for me. If you can see the Fous wins here. Said, all right, holy shit, just banked $237,000, 782 profit shorting the market dump. This was foreseeable, and we nailed it after that bull trap on Bitcoin. Okay, so these are all the profits from Femex here: $85,000 or $8,500 on Bitcoin, $67,000 on Ethereum, $9,600 on Deep, $633,000 or $63,000 on Sui, 54,000 on Bitcoin. So a lot of different patterns that came into fruition. Just to show you some of those examples, Sui on the daily chart, right? We got short right here. We had bearish market structure, lows were being taken out, price came back up into supply, into that zone, and then absolutely dumped out of that level. That's where I got short, right? Basically same, we're in bearish market structure, change of character, short into supply for that low to be swept and taken out. Same thing with Deep. We got short right here, high velocity move right into that level, faked everyone out right in that zone. It absolutely dumped. SPX was another one that actually did break out, but huge velocity move to the upside, looking like, okay, this may be going to break out. A lot of people are like, this is fucking crazy. Maybe I should long here. This keeps fucking going. And then as soon as that turned into a trap, then it had one more retest. I got short at 151. As you can see here, I think SPX short, open price 151, close price 119. So open price was right around here, 151. Close price was about 119. So right here. And then it just absolutely swept down to 45 cents. So I did not take advantage of this full entire move because I can't predict that this was going to happen. But I can tell you that the signs were there. The gas leak was there. I smelled the gas. Bull trap. Record high open interest for the past 4 years. Bearish market structure on Ethereum. We are in the force pattern of the market, and we're just completely overbought on a monthly chart for the longest we've ever been overbought. So it's important that you can understand the signs and actually take advantage of them, and not only just to make money, but to understand the warning signs, because what I say at the beginning of this, every trade needs to be approached with a defense focused, not offense focused. And I'm sure if you are watching this right now and you were part of that liquidation event, you were focused on offense and not on defense, and you didn't understand what the hell happened in the markets.